Hey everyone. Welcome back to Money Tailors. Today, we're diving into one of the most exciting and evolving topics in finance: cryptocurrency in 2024. What you need to know before investing. Whether you're new to crypto or have been watching from the sidelines, this guide will give you the essential info you need to navigate the complex, but rewarding, world of digital assets. Before we jump in, hit that like button if you're ready to start investing smarter, and subscribe to stay updated on the latest financial tips and trends. Trust me, there's a key insight I'm saving for later that could help protect your investment. You don't want to miss it. What exactly is cryptocurrency? Cryptocurrency, at its core, is a digital currency secured by cryptography, which makes it nearly impossible to counterfeit. The most famous ones, like Bitcoin and Ethereum, run on decentralized networks using blockchain technology. What makes these currencies different from dollars or euros? There's no central authority, like a government or bank, controlling them. This decentralization gives crypto its appeal but also adds some challenges. Some of the most popular cryptocurrencies you've likely heard of include: 1. Bitcoin, BTC, often called digital gold. Bitcoin continues to dominate the market. 2. Ethereum, ETH, known for its smart contract capabilities. It's more than just a currency, it's the backbone for decentralized apps. 3. Solana, Sol, and Cardano, ADA. Both are emerging as strong competitors with their fast transaction speeds and sustainability. Why is cryptocurrency so popular? So, why is everyone talking about crypto? Well, it promises high returns and represents a new way to manage money and transactions. Plus, with more people and even institutions, yes, even banks, getting into the game, the legitimacy of cryptocurrency is growing. Bitcoin's rise from a few dollars to nearly $69,000 over the past decade is a major driver of interest, but keep in mind, these markets are extremely volatile. Prices can drop or surge by 20% in a day. Just look at how Bitcoin went from almost $20,000 in 2017 to under $3,500 by the next year, only to rise to new heights again. If you have the stomach for these swings, crypto might be a fit for you. How to start investing in cryptocurrency? Let's break down how you can start investing in crypto. 1. Choose a wallet. You'll need a crypto wallet to store your assets securely. 1. Wallets come in two flavors: hot wallets, connected to the internet, and cold wallets, offline. If you're planning to hold large amounts of crypto, a cold wallet like a hardware wallet will be your best bet for security. 1. Select an exchange. Crypto exchanges are platforms where you buy, sell, or trade cryptocurrencies. Popular options include Coinbase and Binance. If you're a beginner, starting with a centralized exchange is often easier, but be mindful of fees and security features. 1. Start small. One key tip: don't go all in. 1. Start with a small investment you can afford to lose. Cryptocurrencies can be incredibly volatile, and the last thing you want is to be caught in a price dip with too much on the line. 1. Diversify. Don't just stick with Bitcoin. 1. While Bitcoin is the most well-known, other coins like Ethereum, Solana, and Polkadot offer unique advantages and growth opportunities. Strategies for 2024. HODLing and Dollar-Cost Averaging. Let's break down HODLing and Dollar-Cost Averaging, DCA, as investment strategies in cryptocurrency, especially for 2024. HODLing, hold on for dear life. 1. What it is. HODLing refers to the strategy of holding onto your cryptocurrency investment through market volatility, without selling when prices drop. This approach is based on the belief that the long-term trajectory of crypto is upward, even if there are significant fluctuations in the short term. 1. How it works. If you believe in the future of a cryptocurrency like Bitcoin or Ethereum, you buy and hold, regardless of price dips. Historically, many people who held onto Bitcoin through significant drops ended up with large gains when the price rebounded. 1. Why it works. Cryptocurrencies are known for being volatile, and timing the market, buying low and selling high, can be very difficult. Instead of trying to predict short-term price changes, HODLers keep their investments for the long term, riding out the ups and downs. 1. Risks. The biggest risk of HODLing is that if a cryptocurrency fails or its market value significantly declines without recovering, you could end up holding an asset that loses much or all of its value. For example, during the 2017 Bitcoin bull run, Bitcoin reached nearly $20,000, but by 2018, it had crashed to below $4,000. Those who panicked and sold lost out, but people who held on saw the price skyrocket past $60,000 in the years that followed. Dollar-Cost Averaging, DCA. 1. What it is. Dollar-cost averaging is a strategy where you invest a fixed amount of money at regular intervals, no matter the market price. For example, you might invest $100 every month, regardless of whether Bitcoin is going up or down in price. 1. How it works. DCA smooths out the volatility by spreading out your purchases. 1. When the price is high, your regular investment buys fewer coins. When the price is low, you get more coins for the same amount of money. Over time, this reduces the impact of market swings and lowers your average cost of buying. 1. Why it works. This strategy prevents you from investing all your money at a peak price, just before a big drop, and lowers the emotional stress of trying to time the market. It's great for long-term investors who want to slowly accumulate crypto. 1. Risks. The main risk with DCA is if the asset's value never grows or significantly decreases over time. Even with DCA, if the overall market trend is downward for a prolonged period, you could still lose money. An example of this strategy's benefit can be seen in volatile markets like 2020 when Bitcoin fluctuated heavily. DCA would have allowed investors to buy more during the dips and avoid panic buying during the peaks. Why these strategies matter in 2024. Both HODLing and DCA are effective strategies for cryptocurrency in 2024 because the market remains volatile, and it's nearly impossible to predict short-term price movements. As cryptocurrencies become more mainstream and institutional investors enter the space, these strategies allow everyday investors to take a steady and disciplined approach without getting caught up in hype or fear. By combining these methods, you can lower your risk while positioning yourself to benefit from the long-term potential of cryptocurrencies. Risks to consider. Let's talk about the risks because no investment is without them. Cryptocurrencies are still relatively new and highly volatile. You could make massive gains, but you could also lose big. Here are some things to watch out for. 1. Market volatility. Prices fluctuate wildly, and you need to be prepared for significant drops. 2. Security risks. Crypto exchanges and wallets can be hacked. 2. Always use strong passwords and enable two-factor authentication. 3. Regulatory uncertainty. Governments around the world are still figuring out how to regulate crypto. 3. Changes in regulation can affect the market. The future of cryptocurrency in 2024. Looking forward, experts predict continued growth in institutional adoption, with more businesses and investors entering the market. We're also likely to see the rise of decentralized finance, DeFi, where blockchain technology powers financial services without traditional banks. Institutional adoption in 2024. Institutional adoption of cryptocurrency has been a significant driver of market growth in recent years, and this trend is expected to continue into 2024. Large financial institutions, including banks, hedge funds, and publicly traded companies, have increasingly embraced cryptocurrencies. This is a major development because it brings more liquidity and stability to the crypto market, which has traditionally been known for its volatility. So, why is this so important? Institutional investors bring a level of trust and legitimacy to cryptocurrency, which helps to stabilize prices and reduce volatility. For example, companies like Tesla, MicroStrategy, and payment giants like PayPal have already integrated Bitcoin and other cryptocurrencies into their operations or balance sheets. In 2024, we're likely to see even more companies follow suit, making crypto a more mainstream financial asset. Moreover, governments and central banks are exploring central bank digital currencies, CBDCs, which could push institutional adoption even further by integrating blockchain technology into the traditional financial system. The launch of CBDCs could normalize the use of digital currencies for daily transactions, further legitimizing crypto as an asset class. Decentralized finance, DeFi, and its role in 2024. One of the most exciting trends shaping the future of cryptocurrency is the rise of decentralized finance, DeFi. DeFi refers to financial services built on blockchain technology that operate without intermediaries like banks or brokerages. Instead, smart contracts, self-executing contracts with the terms directly written into code, power these services, enabling lending, borrowing, trading, and even insurance, all without needing a centralized authority. In 2024, DeFi is expected to grow significantly as it continues to attract users who are disillusioned with traditional financial systems or are seeking higher returns. The Ethereum blockchain remains a major player in this space due to its smart contract functionality, but newer blockchains like Solana is also gaining ground because of their faster transaction speeds and lower costs. What does this mean for investors? The DeFi ecosystem allows individuals to access financial services without relying on traditional institutions, and in some cases, DeFi offers much higher returns. For example, yield farming and staking in DeFi platforms can provide significantly higher returns than savings accounts or traditional bonds. However, this space is also riskier, as the technology is still evolving, and the potential for smart contract vulnerabilities or hacks remains a concern. The Bitcoin halving event, a major milestone in 2024. Now, let's talk about the Bitcoin halving event in 2024, which is arguably one of the most important events in the cryptocurrency world. Every 4 years, Bitcoin undergoes a process called halving, where the reward for mining new blocks is cut in half. This reduces the supply of new Bitcoin entering circulation, making it more scarce. Why is the halving significant? Historically, Bitcoin halving events have been followed by significant price increases. The logic behind this is straightforward. With fewer new Bitcoins being produced, supply decreases while demand tends to remain the same or even increase, driving up the price. For example, 1. After the 2012 halving, Bitcoin surged from around $12 to nearly $1,200. 2. After the 2016 halving, Bitcoin climbed from $650 to nearly $20,000 by the end of 2017. 3. Following the 2020 halving, Bitcoin reached an all-time high of nearly $69,000 in 2021. While past performance doesn't guarantee future results, many analysts believe that the 2024 halving could once again trigger a new bull market for Bitcoin. However, it's important to note that market conditions and regulatory changes could also influence the outcome. And now, for that key insight I mentioned earlier. In 2024, the Bitcoin halving event is expected, which could potentially reduce the supply of new Bitcoin entering the market, historically leading to a price surge. This is something you'll want to keep an eye on. Cryptocurrency can be an exciting addition to your investment portfolio, but it's essential to proceed with caution. Diversify your assets, stay informed, and only invest what you can afford to lose. If you stick to these principles, you can safely explore the potential of this rapidly growing market. If you found this guide helpful, don't forget to hit that like button and subscribe for more tips on how to make your money work for you. And, of course, drop a comment if you have any questions or experiences to share. I'd love to hear from you. Thanks for watching, and here's to your success in the world of cryptocurrency.